Yeah, my voice still having some difficulty. Please bear with me. XTN ticker, SPDR S&P Transportation ETF, sector financials. But I think all ETFs, they're in that sector. That's how they regroup them. Transportation, guys. Monthly candle chart. Look at that beautiful, beautiful, beautiful stage 2. Some dips, some warning signs, slowing down, still closed above. And then you see when the price action starts being volatile, bigger candles than usual, down moves, up moves. What happens on a down move like that? All the people that bought here say, oh man, I'm going to break. When I get break even, I'm going to sell. Oh, and all that pressure brings it back down. Buyers getting in. Same thing again. All these sellers, the ones that didn't get out, try to get out, guys. And that is supply and demand, stage 2 breakdown, base. With these long wicks right here. Nice buyers coming in, push up the price. And you had a nice breakout, continue. Stage 1 breakout, stage 2 breakout, after stage 1 base. Explode. Sideways move, even going down a little bit. Explode. Sideways move. Every time you're far away, guys, from the 12-month moving average, right there. See how far you are? It's right down here. It's close to 45. Above 45, the price at 53. Here's a better risk-reward ratio entry. You could start taking positions when you're here, protected by that 12-month moving average. And then when you have the actual breakout, you could add another position, and then add on continuation breakouts, on pullbacks on low volume, close to support, close to 12-month moving average. And here it just decided not to continue anymore. So we have here the monthly defined. It just said, I can't do it anymore. We're going down. Broke down below the 12-month moving average. And trying to get back up. So now we have October. I think we have 2 weeks left. You got to really check that level right here. So that is 61.80. If you have a close below that, then it's implied measure move time. Top to bottom of the formation, added to breakdown line. And it's going to bring us down all the way back down to 55. 55.50. And it coincides with a wall. What's a wall? Well, it's what I call previous resistance turned support. So that target right here is going to be pretty much at the beginning of all the support that's should start arriving at this level. And that's how you do it with my chart trading framework. Simple. But now we're going to zoom in on the weekly, check out stage analysis, stand 1, stand style. See if there's something we could do with this. You see the 12-month moving average starting to flatten and go down. And the more the price action is below, the more it's going to drag it down and create that momentum. Price action below drags it down, gets far away from it, comes and hugs it. That slows down the decline. Oh, price action above the 12-month moving average starts inclining, create that trend, and that's how it is, guys. Up and down, up and down. All right, let's go. Let's head to the weekly. Weekly. So what we have here is, I'm going to remove all drawing tools. Where is my weekly defined breakdown line? This is pretty clear cut right here. Price action last week closed below, but we have a wealth a weight of evidence. We want more than just horizontal breakdown lines close below that. Remember, we had that monthly. We're going to wait for the monthly to make sure that we don't get trapped. When we have the Ichimoku cloud, we want to close below that. That is going to act as support and get sug the price, help the price get sucked back up above those breakdown lines. What we do have is increasing volume on that down candle. That's very, very constructive for a stage 4 breakdown. We have sharp underperforming of the SPX. That is in the weight of evidence. That is stage 4 stuff. That's downward trend stuff. It's red. The Mansfield Relative Strength Indicator. What does that mean? Declining 30-week MA, price below the 30-week MA, and underperforming the SPX. So right now, that could definitely be the beginning of a stage 4. But since we don't want to get trapped, we're going to want to have a close below right here. The same. My weekly defined breakdown line is the same as my monthly defined breakdown line. We want to close below 6180. And ideally below 60 because we want to get out of that cloud. Here you see there's another. Because you know how it goes. You need more and more and more price action to make sure that 30-week average. You want more price action below that 30-week average. Pull it down. Make sure that trend is really in your favor. So any pullbacks will most likely be pullbacks and not corrections, not reversals. Might actually have a pullback here. If you go through this support turn resistance, then you might hit this one here. And if really that one was too weak, then you might even go hit that 30-week moving average and then go down. So maybe that's going to happen in the next 2 weeks. I don't know. We'll check it out. But right now, it's too early to enter as a stage 4 continuation breakdown. This could be the trap. What you want is a pullback on contracting volume and a price action to go back down maybe when we're out of the Ichimoku cloud. And hopefully get the October close below that breakdown line. That would be awesome. But it's not looking too good, guys. I don't like this red candle right here. But see, you had a warning sign back here. You did have a huge red candle. But again, it's like the weight of evidence. Oh, Pat, there's a red candle here. It's a stage 4 breakdown. No, it's a warning sign. You're still in the 30-week average, still going upwards. You're above the 30-week moving average. You're above the Ichimoku cloud, the green cloud. But it's a warning sign. What happened after that? Well, the price action started consolidating, tapering off. Oh, even gone in stage 3 territory, trying to get out. Oh, no, back in stage 3 territory, trying to continue stage 2, and didn't quite make it. Still underperforming the SPX when it was above this horizontal breakout line here. So you see that could have been a false breakout right here. Oh, you see it's not above our horizontal breakout line. Let me check. You know what we're going to do? We're going to let's dig deep that one. Here, this one. We're going to look on the monthly to see if we had a close above an important breakout line. And we did have a close above here. Man, that could have been a trap right here. Right here, yeah. We didn't have a close above that weekly defined breakout line. We had the close above the monthly. So if you want those check marks, those check marks, you would have had some. You would have had mixed signals, and that's the difference between entering a trade and getting whipsawed, or really increasing the odds of that of that entry to not to be successful, to continue in direction in a manner where never really threatens, never goes back in negative territory, and it just keeps trending up and up and up. But you still, and another word of evidence, underperforming the SPX. You don't want to be in a stock if you're not overperforming the SPX. So start giving some signs, but the market said, eh. And these situations happen all over the time. These where you say, oh man, it's gonna go up, it's continuation. But if you really take a step back and you really look at the whole picture, it's not an A++ setup. You could say, it's a B+ setup. But what you want is A++ setup, and you want to find as the maximum number of criterias that check for you to really pull the trigger and have full confidence that you did your homework. If something extraordinary happens and it doesn't pan out, well, you can't blame yourself. But if you enter the trade and you see that you're not overperforming this VX, and the volume wasn't there or other criterias, then you're not helping yourself. And that's stuff you want to avoid, guys. So it's starting to break down. I'm going to wait for the end of the month. See if there's a pullback. If the pullback hits the 61.90 and then goes back down, right here, goes back down, or if it goes back up. And what's important is if it pulls up, when it pulls up, you want contracting volume here, guys. All right, that's it for me. Transportation ETF. Saya so. Ciao, guys. Sorry for the voice.